Hey, what's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, we're going to talk about the solutions with dealing with debt. Specifically, I want to talk a little bit about credit card debt, but I want to throw in there timeshare debt and automobile debt, repo debt, or if you have an automobile and you haven't been paying on it and you're trying to figure out a solution to be able to get your title. Now, I want to be upfront with you right now and apologize if I seem to be either rapid or I might skip some things that some details. That's because I do this all the time, and some of the times when I'm thinking about something, I don't actually say it. So I will apologize. I want to apologize for that up front. You can rewatch the video, or you can post your comments or your questions, and then I can clear those up, because when you do something over and over and over again, it might seem easy and you skip over certain things that I would check if I'm doing a document to a creditor or a debt collector. I might accidentally skip that when I'm making the videos, and I apologize for that. But and another thing is what made me want to throw timeshares into there is that a lot of people their credit is being destroyed due to timeshare agreements that they have. And these are like huge expenses on people. And you hear the commercials, people are trying to get out of these timeshares. And one of the articles that caught my attention yesterday is that Dave Ramsey, who is very famous for helping people get out of debt with his snowball debt program, and he's being sued for over $35 million by people who had gotten into that timeshare program from him referring them and advertising them on his show. And so I've been aware of the timeshare companies. I've had timeshare companies come to me about helping people get out of their timeshare, and I'm always willing to listen to see how they're gonna be able to help my clients or be able to help anyone that I refer to them. But one of the things that I always do, no matter how much money a company comes at me, and there have been several companies, and there's been one in particular who called me and emailed me over and over and over again to make recommendations for their company, and they put the money, said this is the amount of money that they would pay me, and then I had a conversation with my wife, and we decided to decline. And it turned out to be even quicker. Sometimes it takes years to find out if a company that you're referring people to, if it's doing the job that they're supposed to be doing. Well, this one happened the next month. So if I would have signed the month before, the next month there was problems with that particular company. But what happened with Dave Ramsey, he was working with a company called TimeShare Exit Group. And they were charging people thousands of dollars to help them get out of their timeshare. And so now there's groups of Dave Ramsey customers that are suing him because he made the recommendation to them on using them for the timeshare. And when I was doing my research, I was like, how much are they actually paying? Because for that type of service, that you're not supposed to take money up front for that particular type of service. And people were noting that they had paid $3,000, $4,000, $5,000, $7,000 to get help to get out of their timeshare. And basically, when I did my some investigation on what they were doing with some of the clients, some people paid them up front, and some people had paid them later, or paid them a portion of the payments that they would have been paying to the timeshare company. And so what it really came down to be, when I looked at it in full detail, was that they were doing exactly what the debt relief / debt settlement companies are asking people to do. And that surprised me, because for Dave Ramsey to be involved to do that. Now, I believe that he got into it to help the people, because he's been around too long. He's shown that he is trying to help people make better decisions. But there is one decision that I've always talked about when dealing with debt settlement companies and debt relief companies, and now we can include that with timeshare companies, is that the one way that they make their money, because if people are struggling financially, they are going to have to give a solution that's going to give relief now, and they're going to have to give a solution that's going to give them the overall relief. Because so there's like a middle solution, which is take the pressure off of me right now. And then there's a solution in the end, which is the end result, which is I want you to get this timeshare off my back. I want to get out of that contract. And so that surprised me that Dave Ramsey would be involved, not to have people stop paying their payments, because that's just part of the process, but to not be in more of the sales, part of the sales aspect. I'm not talking about him making the calls and calling people back and selling them. Is that he should have been clearly upfront about what people have to do. And this is what we do with the Credit Repair Shop. And I'm going to talk to you about these solutions right here. Is that I always talk about it. I know I repeat it, but I always say is, where are you now? Where are you now? Because now is what's going to really determine the way that the solution that you're going to have to take to get to where you want to be. And then also, what is the solution? Does that solution sound logical? Not only does it feel good, because we make a lot of decisions off of how we feel. A lot of you will do business with me because you feel like I'm the right person to do it with. And that's why I make these videos to kind of do that's why my videos are repetitious, because I want you to feel good about working with me and my company. But I want you to also have a logical understanding of this is the process. I speak a lot about the process, because there's a process depending on where you're at to be able to get you where you want to be. And there's some understanding that you have to understand, because if you only go by your feeling, you're going to forget, or you're not going to remember what has to be done. That has happened in the past with clients where they would say, my sales reps didn't tell them something. And I'm saying to myself, I can listen to the phone calls also, but my sales reps are like robots. They have the script in their head, they have it so much in their head that they can't even really go outside of the script. Like I tell them, hey, you kind of need to not just go on the script. You need to kind of talk, have that back and forth with people. So, but there's certain things that we tell people always when dealing with them with their credit, is that we have an 8-point validation process and a 2-phase settlement process. When some people don't hear the 2-phase settlement process, the reason why we had a 2-phase settlement process, because it's depending on where you're at with your credit repair process, is going to determine if there's going to have to be a 2-phase settlement process. And that 2-phase settlement process is where we approach your creditors or provable, validated debt collectors to settle your debt so you can get to where you want to be. So it's not all this back and forth for years. Some of the people had stated, even with the TimeShare exit group, that they had been with them for 3 to 4 years, hoping that they were going to get their situation taken care of. And then the next thing is a third party. If you go to my website, thecreditrepairshop.com, I specifically state in our guarantee box that we cannot guarantee what a third party is going to agree to. When you're dealing with credit card companies, when you're dealing with debt collections companies, debt collector companies, when you're dealing with auto finance companies, when you're dealing with timeshare companies, no company, the Credit Repair Shop, Dave Ramsey, Timeshare Exit Group, any debt settlement or debt relief companies, none of us can make a third party do anything. You can offer resolutions. You can look for the word is skipping me right now. You can look for violations. You can look for technicalities. but you can't make them do anything. And some of the times, even if there's a violation, you may have to be willing to take that to court. And I'm pretty sure everyone with the timeshare exit team that signed up with that company were thinking that they were going to take them to court. And they rarely will go to court over any type of situation. And that even goes with debt relief companies and debt settlement companies. We are the only company, so far, we are the only credit repair company and debt relief service, which we don't even do debt relief the way that they do it because they require people to make these payments. We don't have people do that, but we're the only one that will actually assist if you get sued in finding that resolution. So now let's talk about it. Knowing where are you right now? With your credit card debt, are you making the payments and you're just barely making it? Or have you allowed those to charge off? Or let's walk it up. You're making payments, you're living paycheck to paycheck, but your credit is good, you have not messed up anything, no late payments or anything, but you're just struggling. You're struggling. That's what makes that so immediate, because it's like you know that it's like a volcano, you're gonna erupt, you can't continue living that way. The next one is where you start missing some payments. You start missing them and you're like, this month I can't do that one, or I could do that one and catch up next month on it. You know, you're starting to, like it's an earthquake, like a little earthquake. It hasn't crumbled anything yet, but it's like you're shaking. You're trying to figure out what you can do. You're thinking about solutions, and that's where you're in that now area. When you're in that now feeling, it's like I need to do something now because I can't stand to keep going through this. And then the next phase is where you've allowed everything to just charge off. The stuff you like, and this is crazy. Well, it's not crazy because I've went through this feeling too. So let's not say people are crazy. It's a mindset. So you have the first mindset where you're trying to protect everything. Had a second mindset where you're like going through and you're like, I just, this stuff is killing me. I'm not going to continue dealing with my credit card debt or all of this debt this way. I'm going to let some stuff go. It's like it's like a little piece, it's like you're taking baby steps to go into the next level, which is where you just let everything go. Where you just let everything go. So now understanding where you're at, if you have credit card debt and you have not stopped paying anything, you're living paycheck to paycheck, what would be your most logical solution? It's the most logical solution, but it's one of the hardest solutions to do because we have a lot of bad habits that we get used to doing. That's why we're in that problem of debt. One of the biggest, I would say one of the worst problems to get into with debt, like this is the one where if you get into this situation, you're gonna have to make drastic changes, and it's gonna end up probably ruining your credit. So let's talk about option number one. You have credit card debt, you're paying your debt, but you can look at it and you can be like, I know that I make enough money to pay my debt. I'm just blowing my money on stuff. So solution number one would be find out where all of your extra money is going. And the easiest way to do that, this is the way I did it, this is the way that some other people train you to do it, is just all of the money that you spend, you know what you're spending your bills on. The next thing you need to do is to figure out where you're spending your extra money. And I tell people for a week or 2 weeks or a whole month, depending on where you're at in your situation, is just get the receipt. Everybody say, I don't need the receipt. Get the receipt. Or if it goes to your phone, get the receipt, because this is going to get you to where you can understand your whole financial situation on where your money is going. So get the receipt. Add up everything that you spent that was not going towards your household expenses, your consumer debt, like the credit cards and that type of stuff. And look at how much money you have. If you have money enough money where if you stop doing that behavior, and you applied that to your debt, or you just kept paying your debt, but you saw that you had extra money, as long as you didn't go shopping every weekend or do something, your solution is right there, and all you got to do is just now focus on changing your habit. You have the money, just focus on changing your habit. And this was something that I had to do, but I had to go all the way through destruction to get to that. And I'm trying to guard people now because of what I learned when I went through my issues, is that could be the quickest path to success. Now, there's people that are out there that talk about, hey, if you got credit card debt and you got all this other debt, you can use, techniques like velocity banking and all of that. Think about it. Solution is that, are you of the mindset to be able to do that? See, there's a lot of solutions out there, but like what I'm trying to get to you to understand is that the solution could feel good, but is the solution logical for where you are right now? Understand where you are right now and what you are willing to do. I had a video yesterday that one of the secrets that is right in front of our face, because there's a lot of books, tapes, helping people with credit, helping people with debt, helping people with budgeting, helping people with to stop making bad habits, right there in our face. But the reason that people don't do it is because most people just won't do it. And if I had the answer to that, I would be a trillionaire, because people don't do things because they just don't want to do them. They don't either feel like doing it, or they don't feel like it's going to work, or they don't want to go through the work to do it. It's going to be those and probably some other reasons. So there's options out there. People talk about velocity banking, where you use your debt to pay on your expenses, and you're actually making things with simple interest instead of paying stuff at like if you have a mortgage, it's a way to pay your mortgage off faster. But and then with credit cards too, where you could utilize it to pay your credit card debt down. But it takes a lot of work. It takes a lot of changes in your behavior, but that's an option. And there's a whole bunch of other options, like Dave Ramsey has a snowball. I do something similar with people where we, show them, hey, let's just get all your debt lined up. Let's see where you're at and put you on a budget, and you just stick to it. And you have to stick to it. And the thing about it is that it's going to take time. This is something that's not going to happen overnight. Some people look at doing a debt consolidation. Still, if you do a debt consolidation, what do you have to do to make the debt consolidation successful? Is you have to stop spending your money on stuff that you shouldn't be spending on. I've seen plenty of people get a debt consolidation loan, and then they ended up using the other credit cards after they moved everything over to that loan. So you can't be doing that type of stuff. So understand where you are now, and then if you're making your payments and you find out where your extra money is going, and if you can manage it that way, then that is your solution. That is your solution. You have to reach out. No extra expense. You don't have to contact my company. You don't have to contact anybody. All you have to do is sit down, have a family meeting if you're married, and just say, this is going to be the plan and we're going to stick to it. That is exactly what my wife and I did, even though we had crashed up everything before we got to that point. The next step is with your credit card debt, if you're missing payments and you know that this is just heading the wrong way, like maybe your income, or you just know that you've made horrible decisions. The next step that you could do to potentially get relief, if you haven't already done this, is that you can call your creditors, all of them, your auto, your credit cards, everybody, and say, I need to get a deferment. I want to defer all of my payments. And then you utilize that money that you got from the deferments. We just did this with a client not too long ago, had over $8,000. $8,000. There was one for $1,500, but I'll go to the client that had more than that. $8,000 of open money when they stopped paying the debt, when they got the deferments on all of the credit card debt and their other debt that they had. And I was like, okay, and with that money, what you need to do is you need to utilize that money to pay down the cheapest debts and just do as much as you can for as long as you can. If you Now, let me tell you how finance works. With companies, you know that they have reorganization, Chapter 11. They have all of these different things that they do to protect companies so they can keep going and pay their debts and do things without going into full blown out bankruptcy. You can do the same thing for yourself. You can do the same thing for yourself, but it's going to take some work. It's going to take some back and forth talking. But these companies, number one, you're not dealing with an individual. You're dealing with a company. You're dealing with a company, that third party. And things can be proposed to them on like, hey, we got, if everybody will do this 6-month deferment, we're going to pay this one off. We're going to pay this one off. We're going to pay this one off. And we're going to be getting to you, and they're going to be able to pay you more reliable. You're going to be the one where maybe we don't need to offer a settlement. They'll just continue paying your loan that you had out, or your credit card that you had out, or the automobile debt that you have. But we need to have this plan so we don't, disrupt and crash everything to where they're not able to pay their debts at all, and then you're not going to get any money. Like that's the back and forth talk. But when you think about that solution, is that a logical solution? Is that a logical in your own mind? I know it can feel like, yeah, but is that a logical solution? And is that an understanding where you're not making promises to people, number one, that you can't keep? Because I said that you would approach them with resolutions and try to see with that back and forth what you can get negotiated. And believe it or not, some of the companies will say, well, let me see your plan. And they see all of the different debts that you have. And they're like, okay, we either want to go with the plan or we don't want to go with the plan. And some of the companies might say, it ain't going to work. Just do a 1099-C and the debt is gone. They might do that, or they might, you just never know what they're going to do because that's in their control. So you got your deferments. This is the person who can get the deferments, pay off debt. You have your plan. You just say, you don't even got to get the deferments right now. What you could do is get a piece of paper out, write down all of your debt, and say, if we look at all of the monthly payments we have, if we could get a deferment, how much debt could we use if we paid it off? If we got a 3-month deferment, if we were able to get a 6-month deferment, how can we do that? Now, be very careful with your mortgage with doing this. Be very careful with your mortgage. For me personally, I would say don't include your mortgage. If you do, you have to make sure that you get everything in writing from your mortgage servicer that you're going to have a forbearance. You got to make sure, because you don't want any, tricks or anything played on you to get your house taken away. So be very careful with that. With all of this consumer debt, you can do that, and you can try to figure out if this plan is going to work for you. Now, with credit card debt, the blow up scenario is where you end up just not being able to pay, and then you're going to have to go through a 180-day process of them calling you, trying to get payments. But when it hits that 180 days, that's 6 months of no payments, they're going to charge off that account, and then you will have the ability to start a negotiation process with them. I've heard, but I still don't have proof, I've heard that Discover Card actually did a negotiation with a client before it went to the charge-off process, but they didn't show me the proof. And what I'm thinking is that they were already in the charge-off phase and they just wasn't paying attention, because when you're going through that now, you're focused on, I need a solution right now, and there's a lot of emotion, and some of the time will pass and you don't even know that that it's been charged off. So with our credit card, what we have is but we're going to do our budgeting. We're going to budget to see if we can make it work that way. If we can't, we're going to look at deferments. If it can work that way, we can. If we can't, it's going to be charge off. So that would be the final with charge off. What do third parties, what is their control? What is going to be the thing that you're going to have to go back and forth to see if there's any relief is number one. With the deferments, is how long. You're gonna have to see how long they'll allow you to do it if you do the deferments. If it's a charge off, you're gonna have to go through 180 days. The credit repair shop can't speed that up. A debt relief company can't speed that up. Dave Ramsey can't speed that up. No one can speed that up. So I'm telling you, this is the process. It's going to take 180 days for that to charge off. Once it charges off, and this is what the third party is in charge of, once it charges off, and in between that 180-day period, the third party is going to be calling, and they're going to tell you, I'm already telling you from experience, they're going to be trying to make some sort of payment arrangements for you. During that process also, when you're not making payments, the debt is going to keep building. The fees are going to keep adding up on there. So you might have had a balance of, $5,000. When this whole process ends up going, it could be like $10,000. It could be $8,000 to $10,000 because they're going to charge you fees, and they're going to charge you fees for not making payments. So there's a fee for being late. There's a fee for not making payments. And then that's going to be like that Tony Soprano where they're stacking it, making that the principal. And then that's going to be stacked on top of the interest, and then the new principal balance. And then it's going to be a higher interest, another fee. So you can see how that's going to grow. So once you get to that 180-day period, the gates open for solutions that will become available for you. And when it hits that date, some companies, I would say most of the companies probably at the beginning are going to be willing to listen to you for settlements. They're going to usually be very high at the beginning because they're going to want to try to get as much money as possible. Some of the companies like Discover, American Express, Capital One, some of the major investment type banks like Barclays, some of those, they will usually hire an attorney to try to sue you to get the money. They're going to do their tracing, their research to see if there's a potential on it. If they see that you have any assets or anything, then they're going to, try to collect on that, utilizing threats on those assets or taking you to court and saying that they believe you have assets, especially if it was a business. If you had a business and it's attached to your personal, that's going to be one of the options that they're going to do. And I see that a lot with the bigger cards like Amex, Discover, when you had those business cards. But you will be able to start negotiation process. It's going to be a tough process, a lot of back and forth, but it can be done if you understand where you're at. So at the beginning, this is where you were at that time. Now, when you get over here, you're in their playing field, but you still have power, but you have to understand what is the game plan at that point. It's going to be expressing your hardship, because we always talk about that. You always have a right to express your hardship. Maybe your business closed down. Maybe you had a medical, with yourself, medical issues. Anything that could have happened. I have a lot of clients that are veterans at PTSD. They just wasn't able to work. They wasn't able to continue with their bill. Like, all of that stuff needs to be included, because you never know if they may decide to do a 1099-C. That's just part of the walk-up process that we use, and I just think that every company should, if they're in the debt relief debt relief industry, that they should use that walk-up. But the longer that debt goes, the more opportunities come about for a lower settlement. I've talked about clients where we went 2 to 3 years. They started at 75%, went down to 50%, went down to 20, 25%, the longer the period of time it went. If you're utilizing a debt relief company, what they're going to have you do is they're going to have you stop paying your payments, and you're going to start paying them a part of your payment. So that's how they get that relief. They're like, the solution is for your credit card debt, and you're under this pressure right now. What we want you to do is to stop paying them, send us half of the money. We're going to put it in a reserve, and then we're going to do settlements with that. And please watch my videos on dealing with debt settlement, because there's details in between that you need to understand, because it's not just as simple as you giving them a portion of the payment that you had, and then they're just going to go out and settle. They have fees that are involved in that. So now that's where you're at with that one. So now with a timeshare, one of my former employees who she didn't leave because of she didn't want to be with the credit repair shop anymore. She ended up starting a daycare, which I always encourage my employees to do, to step out if they are of the mindset to start their own business, and I help support them in any way that I can. But she ended up starting a daycare. But recently she sent me a letter where she had gotten a timeshare, and she was like, I don't know what I can do. I need to get out of this timeshare. My credit, I had built it up. You know how much I care about my credit. And she just couldn't continue making the payments, and she signed up with one of the timeshare companies. So now, they use the same strategy as the debt relief companies. Where you're at now is that you're just struggling to pay that timeshare. And then also when you got into that, you were like, I can't even use this thing when I want to use it. I have to schedule. It's not really like you own the place. Like I have friends who have cabins up north, and it's theirs. They like, I can go there every weekend. I can go there and stay there for a month. I can whatever. They can go there at any time that they want. Yeah, they paid it. Yeah, they paid more, but it's a lot different. And a lot of people who end up getting into these timeshares, they start having the feeling that it was buyer's remorse because of the situation. You would rather pay more for something that you own 100% than less for something that you don't own fully. I'm just telling you, that's just the way that people will feel. And so a lot of people get those timeshares and they start feeling that way. So the first thing is the solution. And we're going to talk about the third part. The solution is you need to look for violations. The main reason why this whole timeshare exit industry, or this timeshare relief, or stop your timeshare services exists, is because people feel violated when they go to those. I don't know if you've ever been in a timeshare meeting, but my wife and I went to one when we were in our 20s, and I can tell you that they put a lot of pressure on us. It was in the Wisconsin Dells, and we went there with our children, and we had sat us in this room, and when I think back to it, it was like a closed room, and there was a few people in there. And back then they were promising to give you this small TV like this. This was way back in the 90s. This small TV, portable TV. People, we have portable TVs now with our cell phones, but it was a small portable TV. And we went through it and we were like, we're not gonna do it, but you give us our TV. And they were like, we're not gonna give you the TV. And I'm like, okay, but it wasn't, they didn't say that at the beginning. We just said, we're not gonna do it. They took us to another room. Another person sat us down, put a whole bunch of pressure on us, said, we're not gonna do it. But there was two other couples with us. They must have did it because they took them to another room. I'm pretty sure, or unless they just separated us all and they had the presentation person to see who wants to do it easy. And then after that, the people who said no, which you had raised your hand, and I just don't remember what the other couples, because we were focused on ourselves. But we ended up having to go to another room, and they put more pressure on us, and we still said no. And then they took us to another room, and they put more and more, like a lot of pressure on us. We still said no, and that person said, you don't get the TV. And we said, we don't give a what about the TV. We want to get out of here. We want to get out of here. And that's where when I talk about you have to be strong enough to not take the deal, that was one of the deals that my wife and I stayed strong on. And that was actually before we started going through the issues with our credit. That was just one of the times where we just stood our ground and said, we're just not going to do this. This is a bad deal. This is just 100% bad deal. We don't want this expense. We don't want to have to come to this same area, even though some of the time they say you can go to all these other areas. No, we want to go on our time. That was one of the things my wife has always been hard on, is that we buy all of our plane tickets directly from the airline that we're going to fly on, and we've never had any issues with seat issues. And we, in our hotel, we buy everything direct. We don't go through any of these middle apps or whatever to do that stuff. So with the timeshares, they're going to look for violation. One of the things, if you listen on their commercial, they said if you felt like you were under pressure, if you felt like you had no other options, if you felt like that deal was not, like they'll tell you this deal won't exist if you walk out of this room. You will not be able to, even if you wanted to come back, you can't get that deal. Well, what they're trying to do is they're trying to build a I don't want to say a case, because they're rarely going to ever take anyone to court. They be there for years taking people to court, and it would be a high expense, because that means that they would have to have networks of attorneys all over the place, which is what they promise. But attorneys don't work cheap, so you would have to be getting like it would have to be thousands of dollars to do that. And the thing about it is that an attorney, they can't just send stuff to an attorney for work that they worked on. That attorney has to actually review it and go through it and believe that it's a case that they would want to take. So this becomes a very bad situation, and we can see that it's already collapsing. Some of the timeshare companies have already went out of business. And the one that Dave Ramsey worked with, I think that they went out of business, Timeshare Exit Group. And there's some other ones. But the violations is what they're looking for, because you could legitimately set up a situation. Remember where I talked about the 10 where you do your hardship with the credit card companies or with your creditors? Same situation is where you're expressing that hardship or the violations that you believe that would be able to get you out of that timeshare. So, and that's going to go to the third party, and that's going to go to their legal team, to where they would look at it and say, well, this could be a provable violation, or this is not provable. So that's basically what they're going to do. So if we say bottom line, because this is how I'm going to help you protect yourself on making these decisions. If we say bottom line, even before you approach anyone to meet, we don't work with the timeshare, so please don't come to us about the timeshare. But let me tell you how you need to not just go off of the feeling to get the relief now, how you need to understand what is going to be necessary for you to be able to get out of that timeshare. Is that you need to really, bottom line, look at the violations that you believe, and then are those violations going to be provable to the third party? And does the third party believe that those violations are going to put them into any jeopardy with them being able to stay in business, with them being able to continue with their business practices, and not having any attention placed on them from agencies who are regulating them? That is exactly the way that they're going to look at it. So if you don't have that, I don't care what anybody tells you, if you don't have that, nothing is going to be done. They're going to say you just need to keep paying us, or we're going to tear up your credit and we're going to sue you. That's what they're going to do. So you need to look at how your violations that you believe are provable. And then what these companies do is they will send a demand letter to the third party, which is the timeshare company, whoever is servicing the loan. And they will say, based on this contract, based on what my client is saying, we believe that these are some issues. And then they will start that back and forth process to try to get you out of your timeshare. From what some of the people were stating with the company that they were dealing with, is that they feel that it just wasn't, that there was really no work being done. That could be, based off of the third party not responding, which is something that starts to happen after a period of time where they're not going to do anything, and they're like, hey, either you take us to court or you tell your client they better make that payment next month. That's basically what they will end up saying. So if you don't have any provable violations, like provable, because no company is going to stop you having to pay their loan that they gave you on that timeshare unless they believe, like, hey, this was an issue. and this person can prove it. Because there's a lot of stuff that people will say, but it can't be proven. And it really did happen. We see that a lot in our court system, where there's a lot of stuff that happens, but you can't prove it. And that's like they're, in their back pocket. It's like, okay, you said it happened, but you have no proof. So one of the ways that you could do to kind of get them to look more in your favor is to look at that contract. You got to scan that contract. You got to look at that contract for what it says, and then you have to try to figure out how can you put everything together in a demand letter to show your side, and then you will be like, hey, this is what happened to me, and I believe that I should be able to be released out of this timeshare. But that's basically what those companies are going to do. There is no secret sauce to it. There is no we can make you do it. There is none of that. And if you look at the stats, you can do this yourself. Probably about 1 to 2% of all of the people who go to get their timeshare, to try to get out of their timeshare, only 1 to 2% actually get relief. Only 1 to 2%. So understanding where you're at now, you're struggling with the timeshare payments. Maybe that's going into your problems with making your budget. You're like, if I get rid of that timeshare, I would have more money to do other stuff. You got to look for violations. How did they treat you in there? Did they say things that wasn't true? Are you not able to get access to the timeshare when they claim you were able to get access to it? Did they make you sign? So you can't really technically say they made me sign something, but you could say, hey, I was in the room and they just would not let us out of the room unless we signed. One rep said one thing, now another rep said another thing, but we felt like we couldn't get out of there. And so that could be a violation. It could be certain marketing violations on the way that they marketed it to you when you originally got the advertisement for the timeshare. Like, all of that stuff needs to be looked at. Like that's really what the company should be doing, is that they should be looking at how you came in, because there are rules on what they can say to even get you to come to a timeshare presentation. And was that presentation, did you feel that you were under a certain amount of stress during that presentation when they got to trying to sell you? What did they say? What was the process? Like, you're gonna have to really drill down with your memory, and it shouldn't be that hard, because I just told you what my wife and I went through. Is that we actually, I still remember that to this day. It's like I can see these people's faces, and they're like saying, you have to do it. Like, one person was like, you got to do this. Like, we don't have to do anything that we don't want to do. So look for violations. Look at the advertisements that got you there. And you can probably look at some of the new ones that are out there, new advertisements from the company that you're dealing with, to see if if you could craft up your demand letter, add to it the violations, the advertisement, the deceptions, and the contract. You build that up, send it to the third party. Third party still has to make a decision, and they're going to make that decision based off of, is your demands, is that provable? Because if it's provable, you're probably going to qualify in their eyes to be able to get relief, and then you're going to get to that solution that you wanted. Or they may say, hey, this is provable. We've had some other people that had these other issues, and we just want to come to a resolution. Maybe you were going to have to pay, $20,000. Could you settle out for $10,000? I know that sounds like a lot of money, but when you're working your way back and down, there might be ways that you're able to get $10,000, or maybe they say even $5,000. Because the company is thinking in their mind, hey, they do have these issues, but we want to still get some money for this contract. And one of the other reasons that makes it very difficult for these companies, why they don't want to back out, is because the timeshare companies, the actual companies that sell the timeshares, they're actually getting loans from a company that is financing these timeshares. And so they're getting paid the money. So the company that has the contract for the timeshare, these are investors. These are huge investment firms that are putting that money up for people to be able to get these timeshares, and they're trying to get their return on their investment. So they're going to fight hard. But, things can happen, because you could say, hey, we know that you're the finance company, but this is what we went through dealing with the company, and maybe you might want to think twice about, accepting contracts from this particular timeshare company. Now let's talk about auto debt. This is one, I want to put this one in here because a lot of people will call and they will say, hey, I got the vehicle, I haven't been making payments. Now, we know if you got the vehicle, you're making payments, you're struggling, we already know what solution you got to do your budgeting, because you don't want to lose your transportation. But we have some people who will call in and be like, I had a vehicle, I haven't been making payments, but I don't have a title. One young lady said she moved to another state, tried to register the vehicle. They were like, no, you have a lien against this vehicle with this company, and from when you was in another state, and we're not going to let you register the vehicle in our state. Like there's some type of block on there. So that must be something that they're using as a remedy to stop people from being able to register a vehicle if it's in a repo situation. So, solution: if you have the vehicle and you still are you're dealing with the original creditor, what you could do is you could look at the contract, especially if it was a subprime type contract. You want to look at the complete contract, and number one, make sure that it is everything that you thought that you signed for. Now, you might be saying, well, how do I find that out? Well, you have your contract, then you need to also order a copy of the contract that was given to the finance company. Compare those two to make sure that there's nothing that was changed. Believe it or not, there are contracts that are out there with American Credit Acceptance, Santander, where you can look at the lawsuits where people had actually, the sales finance company gave a different contract to the company that was financing it, which is unbelievable. And there's other issues that these companies had, but you need to look for if there was any payment protection insurance. You look for everything possible that could be wrong with your contract. And then the next thing is, if they still own the loan, the next step is, because if you want to keep the vehicles, you got to approach them and say you want to work out something with being able to keep the vehicle. The first thing they're going to blurt out is, well, you can make up all of these payments, make up all of these late fees, all of that stuff. And they're going to say, where's the vehicle? Because they might try to get it repossessed. You may also see, this is where is huge confusion on what's on the credit report, because you'll have your car, you know that it got repoed, but you know that they haven't taken the vehicle, and it'll say charge off. This is what makes people think that maybe there's nothing that can be done because they charged off the vehicle. I don't owe the debt anymore. No, you still owe the debt. They just charge it off because it has to go through that process. With most automobile finance companies, you're looking at about 3 months that they can do that. On subprimes, I've seen it happen within 1 to 2 months, which is unbelievable. So if we're looking at the solution, if you have the vehicle, you're still dealing with the original creditor, what you're going to want to do, you want to approach them, get the original contract, do your review, and see if there's any violations on there. Because that's going to set you up for when you're dealing with that third party, with the original creditor as a third party, on a certain, kind of building your case to be able to get some type of resolution. Again, we always express a hardship because you never know what they may be willing to do with a 1099-C. We always want to put that process inside of anything that we're doing when we're dealing with original creditors and debt collectors, but especially with original creditors. So now you get your contract, you review it, you want to see, number one, has there been any lawsuits with the finance company where they had any deceptive practices, or the dealers that they were dealing with were known for doing things deceptive. Let me tell you quickly, one of the ones that comes to my mind. With Santander, this is something that they were actually doing, is that the dealers were running credit, but they actually were not really running people's credit to get them along with those other finance places. They were actually just running the credit so the person, the individual, the consumer, the auto buyer would know that they did run their credit. But they were actually still sending it to Santander, and Santander had their own internal credit score. So people had higher credit scores, But the dealers were sending them to Santander. The reason why is because Santander was giving them more money. They were when they sell a car, they also sell a loan. They sell a loan to the finance company. And that finance company would take that loan, take the payments. They're going to make their money on the interest. But the dealer is going to make the money selling the car, so the profit in between what they bought the car for, all of the add-ons that they wanted to add on. And then they're going to make an additional money by selling the loan to the finance company. And Santander was paying the most. Santander was getting more loans approved. So they, no matter what they did on that application, they would make that application, they would make everything fit Santander's criteria so it would be able to go through. That's why I said you need to get your original stuff, because also what they found out is that the contract that was coming from some of the finance departments from the dealerships were not matching what was received with Santander. They were doing things where they were changing the income amounts, they were changing the monthly expenses, they were changing all types of stuff. And consumers can't be responsible for that because that's not their job. So that's one of the things that you want to look at. Look at the issues for outstanding or settled lawsuits that were out there with the original creditor, whoever's financing your car. And then the next thing is you need to, regardless of what's out there, you write up that demand letter, you send it to them, and you just like the same thing. Is this stuff provable? Now, if you're with one of those companies that were sued, you probably would have a good chance of proving that you know that there were violations regarding your contract. And if you see the violations on your contract, you know that, but then some of the other violations could be where you were, when you were in that finance office, that certain things were told to you that were not true. And that maybe you have proof that your credit score was higher, but according to Santander, you ended up getting sent to them when you could have qualified for other companies, and that finance company, that automobile dealership's finance department did not notify you that you would have qualified. So in essence, your choices were taken away from you. So you use all of that and you end up submitting that demand letter to them, and then you could get into a situation. Let me tell you the different outcomes that could come. They could outright just do a debt forgiveness. They could just outright do a debt forgiveness, release your title, and get it to you. That can happen. More than likely, they're going to try to offer a settlement arrangement on the vehicle. They're going to say, hey, you owe $10,000. What if we meet in the middle, $5,000, consider it done, you get your title. That's going to be the most, the widely used solution that they're going to offer, because it's going to be like, we're going to get some money. We haven't been getting any money. We're just going to write the rest of this off, do a 1099-C on the remaining balance, and you give us $5,000. If you have it within you, like one of my clients, she went back and forth. She had $13,000. They kept offering different amounts. She ended up at $1,300. So for 10% of what she owed on the vehicle, she ended up being able to walk away. So, but there's a solution for you. But I know that this is a long video, and if you're still here watching this video, you know what I always say, I got a surprise for you. I'm going to give you something for free. All you have to do is contact my office, go to the live chat and say, hey, Steve, I watched the whole video. I got something for you. So if you have a car situation, you're going to have that back and forth. If you have TimeShare, credit card, any type of debt, just understand that there is a process. And if you're willing to go through that process, you will get to that resolution. And no one, not me, the Credit Repair Shop, not Dave Ramsey, not any other debt relief or debt settlement company, no TimeShare exit company can tell the third party what to do. I just told you how you can get the third party to start seeing stuff your way, but no one can tell the third party what to do. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, go to the website your3scores.com to grab your TransUnion, Equifax, Experian credit reports, and all 3 scores. If you have debt collectors coming after you, and that same process can be done, all of this can still be done in a similar way, dealing with a third-party debt collector. The only thing is that you need to go through a debt validation process where you're making them prove everything that they're claiming you owe, not just by giving you the old statements and stuff like that. You want all of the accounting records to see the amount that they're claiming that you owe, so you can, reconcile it. Grab my 3-pack of letters. Statute of limitations letter for debt that's past the legal statute of limitations to collect. It's different in every state. You can go to my website, thecreditrepairshop.com, click the blog, and you can see the statute of limitations for all 50 states. If you if it's not past legal statute of limitations, use a cease and desist collection activities letter to stop debt collectors by making them know that you're going to want them to prove everything about the debt. And then I give you a debt validation letter to go back and forth just in case they don't stop at that point. Please subscribe to the channel, post your questions and comments. Also, for my 3-pack of letters, I do ask for a donation. If you feel it that you want to make one, it can save you time, money, frustration. Those letters really do work, and I would really appreciate that. Please post your questions, comments, subscribe to the channel. Stephen A. Williams, President and Founder of the Credit Repair Shop.